Hi guys, welcome back to my channel. My name is Anastasia. On this channel I talk about investing and especially investing for beginners. In today's video we will be talking about the investment portfolio that was created by one of the best economists and investors of the world. His name is Ray Dalio and he got famous for his portfolio that is called all-weather portfolio or four seasons portfolio. And it is considered the least risky portfolio that has ever been created so far. I'd like to tell you what this portfolio consists of, so what assets you have to invest in, who it is good for and who it is bad for, how to build it, and where you can find these funds if you want to build a similar portfolio from the UK. So if that's something that's of any interest to you, then please keep watching this video. Now, before we start, I'd like to tell you first why I got onto the topic of a very low risk portfolio. At the moment with my own portfolio, I don't follow any particular strategy. I don't have a general picture in my head where I think I have to invest 40% into this asset, 20% into that asset. But now I got to the point when I realized that it is definitely needs to be done and I have to do it in the nearest future. So I started Googling and researching different portfolios, different strategies and tactics, and this is how I came across this portfolio in particular. Why I wanted to tell you about this portfolio is because I think it is great. It doesn't bring very high returns, not historically anyway, but with the current conditions in the market where the situation is so unstable and absolutely everybody talks about the possible market crash in the very nearest future, this portfolio could be a great opportunity to protect your portfolio from big losses during the bearish market, during the market crash. I think a lot of people consider starting investing in 2020 and in 2021, but all the information around about the possible market crash holds these people back. And this portfolio, building this portfolio from the very beginning, could be a great solution for those people who are still hesitating on whether they should start investing now or they should wait for the crash and start investing after the crash. Even though, as I always say, no one knows when the crash will happen and no one will be able to tell you for sure. So there is a website that is called lazyportfolioetf.com that tells you absolutely everything about Ray Dalio's portfolio, all-weather portfolio. You have a very easy to understand pie chart that explains to you what assets Ray invests in order to build this portfolio. So 30% is invested into stocks and shares. So 30% of your money you invest into different companies. This is not a usual situation nowadays because from what I understand and from what I see around my friends and in my case as well, people tend to invest more money into stocks and shares and less money into bonds because the potential of stocks growing fast and high is much bigger than the potential of bonds. But in the case of all-weather portfolio, 40% of it is invested into bonds and they are long-term bonds, 20 years and over. They are all here US bonds, so you are guaranteed to receive your money back and the guarantor is the US government. So hopefully they will not lie. 15% is allocated into intermediate term US bonds and 50% is invested into commodities. Commodities are also then divided into two groups. One of it is gold that takes 7.5% and further 7.5% is invested into a fund that invests your money into different commodities. So it's not just gold, it's all different commodities. Now let's talk about each asset group separately. So let's start with stocks. Stocks and shares is when you buy companies, parts of companies, and this is a great strategy for the times when the economy grows. Now, economy has been growing for several years now, for many years in fact, and the last crisis when the stocks and shares fell massively was in 2008. Since then, we haven't seen the crisis, and everyone's talking now that it is a perfect time for another crisis. And usually when the crisis happens, stocks and shares get absolutely hammered. So imagine that one morning you wake up and you have $10,000 invested into stocks and shares, and all of a sudden you realize that you have only $5,000 left. You wouldn't be happy, would you? They tend to grow back over the time, but no one can predict how long it will take them to get back to the pre-crisis level. That's why Ray Dalio's portfolio has only 30% of the total money invested into stocks. The next asset is bonds. Bonds is a fixed income investment. In Ray Dalio's portfolio, there are two different types of bonds. One is long-term bonds, That's when you lend your money to the government for 20 years and over. And the second part, which takes only 15% of the total portfolio, is short-term bonds. The yield of those bonds is lower than the one of the long-term bonds. Bonds is an asset that people who really worry about their investment and who are not prepared to take any risks invest in. Because over the years, during the biggest crisis that our economy has ever lived through, bonds have shown great results and they don't tend to lose their price and lose their value as much as, for example, stocks and shares. The third asset group is commodities, and half of those commodities is held in gold. Gold is not correlated to bonds and stocks. Gold is always doing its own thing, and it is hard to predict the price of gold, but there is some connection between the price of gold and the inflation. When there is a lot of money being printed, usually the price of gold grows as well. We saw it in 2020 when lots of money was printed and the price of gold has risen as well and beat its all-time high. Now, when I say that he holds 7.5% of his portfolio in gold, it doesn't mean that he goes to a jewelry shop and buys bars of gold. No, he invests into gold through the funds on Vanguard, on Etoro, anywhere where you want, you will find this asset under the ticker GLD. So as you can already see, in this portfolio we have different groups of assets that perform differently under different circumstances and different conditions of the market. That's why this portfolio is called all-weather portfolio. Over the years, this portfolio has returned 5.9% of real returns after the inflation was counted in, and that is close to 8% annually if you count in the 2% normal rate of inflation. This means that if you invested $1,000 10 years ago into this portfolio, nowadays it would be worth nearly $8,000. And another interesting thing that is worth discussing when you talk about the all-weather portfolio is the losses. The highest losses it has ever had since 1970 is only 27%. And even though 27% may sound like a lot to you, but if you compare 27% to 51%, which was the highest loss that all stock portfolio has ever experienced, you understand that all-weather portfolio is basically twice less risky than all stocks portfolio. And then 27% doesn't sound that bad anymore. Going back to lazyportfolioetf.com website, let's check the performance that this portfolio showed in a more detailed graph. So you can see the table of Ray Dalio all-weather portfolio returns over 1 month, 3 months, 6 months, 1 year, 3 years and 5 years. And you see that some assets grow massively over a certain time, whilst the other ones lose their value. And the highest difference is between VTI, which is the Vanguard fund that invests money into stocks and shares, and bonds, and especially long-term bonds, which the ticker on Vanguard is TLT. For example, over the period of 1 year, VTI has gained 51%, whilst TLT has lost more than 15%. You understand that at the end of the day, all these different assets, they balance each other out, and this is how you stay on top of all the crises and all difficult times that market has to live through if you have a portfolio like that. Now, looking at the capital growth graph, we also see that if you invested $1,000 into this portfolio 10 years ago, nowadays you'd get around $2,000 back. And the drawdowns are also very interesting because at the lowest point, this portfolio has lost only a little bit more than 6% over the last 10 years. So if you're looking for a portfolio that includes minimum risk and that allows you to sleep well under any market conditions, this portfolio might be a great option for you. Now, speaking about my plans and my strategy and my own portfolio, Anastasia doesn't learn her lessons too quickly. I think that I'm prepared to take higher risks than what this portfolio has to offer. I understand that nearly 6% return on investment each year is a good result. I mean, it is definitely better than just keeping your cash in a bank, on a savings account, for example. But at the same time, I realize that my goals are long-term and I can afford to take higher risks and potentially get higher returns. At least this is how I think right now, and I might change my mind in several years. But if I was closer to my retirement age and I was understanding that I don't have much time to spare, and I will need this money that I invested soon one way or the other, then I would definitely use this approach that would allow me to think that my money is safe, or as safe as it can be when you invest, because investing always involves risks. The only difference is the actual level of this risk. I also have small doubts about the future performance of this portfolio because of the unstable situation and how the market is right now. We see, and I talked about it in many videos on my channel. If you are interested in hearing more of my views on this topic, then please watch some other videos in this playlist. But basically, with the current situation, there are new assets appearing all the time: IPOs, SPACs, cryptocurrencies. All these things, they are not included into this portfolio at all. And I think in the last year we've seen how big a difference these little new things can make and how quickly they may grow. That's why maybe nowadays we need some new strategies that would also include all these new things that are at the market right now. Anyway guys, thank you very much for watching. I hope you learned something new from this video, and I hope that this knowledge was useful for you, whether you'll use it in the future or not. It is always nice to know what's going on in the market and what options you have when it comes to investing. Thank you very much for watching me today. Bye bye.